Welcome back, traders. This is another weekly report on the gold market. Gold moved higher in the previous week, practically breaking the downward momentum that was formed since late January. Even though the past week could have been an awakening for gold buyers, the trend has not changed and prices seem to have remained rather steady. In this report, we will be overviewing some fundamental matters currently in the gold market's focus, while at the end our technical analysis will provide a clear examination of the price action. The most important matter currently surrounding not only the gold market but also the global economy is the development on the US-China negotiation front. At the moment, we are observing a blame game between the two largest economies of the world. The US has claimed that China has lacked transparency of information to the world over the COVID-19 outbreak, while on the other hand, China, in a report by its embassy in the US, claimed the US has severely undermined multilateral institutions including the WHO and gravely damaged international cooperation on COVID-19. The tensions have escalated since the past weeks also when Presidents Joe Biden and Xi Jinping had a telephone call regarding unfair economic practices and other unresolved issues. We have not observed direct reaction on gold's price yet, but in our opinion the tensions have the potential of lifting gold's price higher. Back in 2019, when gold's price started surging to new yearly high prices, most of the market's attention was upon the trade war between US and China. Thus, history is evidence that gold traders tend to respond if tensions are to increase further. Furthermore, on Monday, a rocket attack was performed on the airport in the northern Iraqi city of Erbil. Tensions in the Middle East, even though ongoing, have not made headlines for some time now, making the matter extremely serious. According to reports, the attack was aimed at a US military coalition. Then again, the matter had no significant impact on gold's price. Yet, military actions, especially in the Middle East, could lead to further tensions that could energize gold traders accordingly. As per the US economic front, US inflation data released in the previous week did not impress traders significantly, while the reaction was felt on gold's price. Gold is usually an investment used to counter inflation. On the day, gold's price did move higher while the USD had already been moving lower. Traditionally, investors flock to gold when considering weak inflation, but due to the COVID-19 circumstances being in motion, investors' reaction may have been mild. Moreover, the largest economies around the world are depending on the ongoing vaccination in order to ease lockdown measures. Easing lockdown measures is the path to further reopening most parts of the economy and restarting the global economic engine. However, gold traders may be critical of the current vaccination process that seems to be delaying. In the following days, a rather packed economic calendar seems to be on the market's agenda, giving gold traders new trade openings and opportunities. On the 17th, we get the US retail sales and industrial production figures for January and the Federal Reserve meeting minutes, while on the 19th, we get the preliminary PMI US market manufacturing and services figures for February. Moving now to our technical analysis. Please note this is gold's 4-hour chart. In the most recent sessions, gold has traded between our R1 1835 resistance level and our S1 1810 support barrier. In case traders are in favor of a buying momentum, we could see gold's price initially engaging the R1 1835 resistance level. If the bullish sentiment is prolonged, then the R2 1855 level could also become a target, while the R3 1875 line stands even higher and could be of particular interest for the bulls as it is the highest level reached since the 8th of January. However, as in our opinion, gold continues to be in a sideways motion with bearish tendencies. A possible drop below the S1 1810 support barrier could prepare the ground for the S2 1785 barrier to be tested. Please note the S2 1785 barrier is the lowest level reached by gold since December 2020. Making it a challenge for the bears. Finally, the activity of the RSI indicator below our chart has been between the 70 and 30 line for the past weeks, implying some ambiguity among traders. That's the end, guys. We hope you enjoyed it as well as found it useful. If you like this video, please share and subscribe. Thank you very much for your time and wishes for solid trading.